Hi everybody and welcome to the next video. So in this video we're going to talk about what MPD lines are and why I think that they are useful for retail traders. So the MPD indicator is just a standard indicator inside AT charts. You just go into this studies menu and you'll find it right here. It's near the top of the list because we recently added it, okay? And you just add it and you may have to adjust the colors. There's a settings section. You can right click to edit the settings. We'll come back to that in a minute, but it just yields by default these sorts of lines. All right, now what are we looking at? Well, the middle white line is a VWAP, volume weighted average price, that is anchored against the actual open at 5 p.m. Central Time the prior day. You can change the anchor date and time if you want. Sometimes people like to have more than one VWAP, one anchored against, say, the open in the evening, another one anchored against the NYSE open, etc. But the VWAP is typically a line that people who are looking at volume, especially on a day that is kind of choppy where there isn't real conviction in the stock market, a lot of times people will use the VWAP as kind of like an anchor for the market to come back to. Kind of like a point of control on a volume profile, that sort of thing. That's typically how we see people use the VWAP. Well, the upper and lower red lines, okay, up here and down here, if you take the day's range of the high to the low, and you divide that by 2, and then you add that value to the VWAP and then subtract it from the VWAP, that's how you get the bands. So they look kind of like a Bollinger Band or a Donchian channel. The idea here is that on a day that has a really wide range, you're going to see a really wide set of bands. And on a day that has a relatively narrow range, you're going to see narrow set of bands. Or near the beginning of the session when there isn't much range, you're going to see a narrow set of bands. Typically, I start looking at the VWAP or the VWAP and the MPD indicator as something that is relatively valid around the London Open, around 2 a.m. Central Time, right in kind of this area. So anything before that, there's not as much trading that has occurred unless there's massive move in Asia. Typically, I'll start thinking of this as something that you could actually follow under certain circumstances, relatively early in the morning. So you don't necessarily have to wait until 8:30 Central to look at this. All right. So why do I think that this is something that most people should pay attention to? The reason is that there tends to be flurry of activity around these areas. And I think that the reason that is that by the time the market reaches one of these bands, there's a good chance that a lot of the retail money that chose to get involved in the middle of the range is being cleaned out. So people who look at MPD bands typically are looking at these as counter trend trade opportunities. So that is good for some people. Some people are not born to be counter trend traders. It's not great for everybody, but it is something that I think you could easily add to the chart to filter out a lot of the nonsense that happens in the middle of the range. And the odds of you seeing like a spike in volume or a flurry of activity on the dome or something like that around these lower areas, in my opinion, is a lot higher. A lot of times you'll see a whole bunch of interest in terms of volume or a lot of trading occurring because now people are getting stopped out. All the retail money that was long is finally saying, okay, I've had enough. And that's when you start to see the market come back to its average or its VWAP. So a day like today is a really great example because even though there was a ton of volatility in crude oil, okay, today's September 17th, so we're all probably going to remember this day and the day prior, there wasn't a lot of movement in the stock market. So when I'm looking at the chat rooms and listening to my customers and stuff, everyone's kind of complaining about the choppiness and so on. Choppy markets are not necessarily bad for intraday traders. You just have to be able to have some conviction about your feeling of whether or not today is looking like it's going to be a choppy day or a trend following day. And a day like this where we see the market sort of shuffling around, there's not that much happening, there's not a lot of volume being traded, there's no news coming out related to the stock market specifically. This is a good day where I think someone could take a look at the MPD bands and say, all right, maybe I can use these as a way to either enter a counter trend opportunity or at the very least keep myself out of this nonsense in the middle here where I'm just going to get sucked into these trades and get tagged out over and over and over again. So if somebody uses MPD bands, they're typically not as active. They might be a lot more selective. that's probably good for them because hopefully they're paying less in fees. They're not getting stopped out as many times throughout the day. There might be less opportunities, but that's not necessarily a bad thing. All right. Now, let me also add another set of lines to the study. So if you actually go to the settings, right click, edit settings, you can actually add another set of lines in here like this. And so if somebody wants to be a little bit more aggressive, meaning if as the market comes up and is approaching the upper band, this is basically half of this value. So you're basically adding a quarter of the day's range to the VWAP and subtracting a quarter of the day's range from the VWAP to get the lower blue line. So if somebody is a little bit more aggressive, or for example, if someone wants to scale in using some micro contracts, which in my opinion is a pretty good use of the micros, which we'll talk about in later videos, you could actually use the blue lines as kind of a mid-range area to look for opportunities as well. So if you're a little less patient, if you feel like the volatility is just not there, there's no chance that you feel like there's no chance you're getting to one of the more extreme areas, then you might want to look at this level instead. So the MPD bands, the goal of something like this is to keep you out of the mid-range nonsense. All right, as a retail trader, you are up against the most competitive systems and the largest amounts of money in the world. And based on what I have seen in terms of being on this side of the business and watching people try to pick these trades throughout the day, I believe that the best option for a retail trader is to wait for an opportunity that is likely to present itself after all of your counterparts in the retail trading community have already thrown in the towel. All right, it's kind of a cynical and gross way to look at things, but if you want to be able to have a chance of not getting trapped in the middle of the range like this, then I think you need to be a little bit more patient and wait for the market to reach these areas that are just hit a little less often throughout the day. And you could look at the other indexes. I've looked at this on crude oil. I've looked at it on gold. Typically, it's going to work best in markets that are low volatility and choppy. So if you find yourself in one of those days, or your other indicators or your studies or whatever it is you use are kind of hinting at the idea that this is kind of a nothing burger type day, then you may want to consider incorporating the MPD bands, which again are a study present natively in AT charts. It's just right here under MPD indicator. Right now it's near the top of the list because again we just recently added it. So I hope you have some fun with it. We're going to talk a lot more about this idea as time goes on. It's something I follow pretty much every day, and I think that there is a real value in the patience and discipline that this sort of an idea brings to the table, because it forces people to wait until these areas are approached before you're really even considering getting involved. And that might have the opportunity to lead you to a place where you're not trading necessarily as often, maybe not as frequently, and maybe it can help you turn the corner. So we appreciate your feedback, thoughts, comments. Please feel free to contact me directly. My email address is in the description of the video. It's pz@infinityfutures.com. We'd love to talk to you. Again, please don't forget to subscribe to the YouTube channel so you can get these updates instantly on your phone or via email. And don't forget to tell your friends about Infinity Futures. Thank you so much. We'll talk to you soon.